Hello, everybody. Thanks for checking in with us for this week's S&P 500 sector spider preview. I'll just get right into it because there's a lot to talk about this week. I mean, last week we said that um, we were just going to see some consolidation. Mark wasn't really going to go anywhere, and guess what? That's exactly what happened. I think the SPY has moved a total of 1 point over the past week. But this week is shaping up to be a little bit different, and I would suspect that in the next week, this week or next week, we're going to see a new trend, either up or down, as opposed to going sideways like we've been for the last few weeks now. There are some interesting things to show you this week. Discretionary, technology, and financials are all above important support levels. So we need to watch over the few days whether those things hold. If they hold, it could mean it's building a base for a leg up. If they break, we're going to see some selling, and we're kind of due for some selling because markets go down too, and we're due for some profit taking. So I'll show you what I mean when we get to those charts. So let's go through what we do here. Um, we know in financial markets there are certain price levels that are more significant than others regarding the amount of supply and demand that exists at them. And you don't need to be a chart guru to know that. You can pretty much just look at any chart and see it. And prices are always doing one of three things: going up, going down, or staying the same. So if you can understand this and have an awareness of where these levels and trends are, it can help your strategy. Excuse me, having a nice little after golf cocktail here. Um, yeah, in terms of technical analysis, I mean, I'm almost embarrassed to call myself a technical analyst because some of the stuff out there is so bad. I consider myself a market technician. But, GAN theory, Elliott wave, all that stuff. I mean, it's fun to talk about, but it's not credible. It's like UFOs and Bigfoot. So just focus on these levels and these trends, and I think it can help your strategy. All right, so this is just an overview. We'll just pop. Okay, so here is a 6-month picture of the SPYs. And I know it's hard to see, but this is like the last 2 weeks. The market hasn't really gone anywhere, but we're still in the overbought side here. Okay, bigger than it is. This is really just, this whole last month or so, it's been going sideways. So let's see. There we go. All right. So anyway, if we keep going upwards, I'm going to be looking for resistance around this 293 level because that was the top last October and September. So we're only a few points away from it. I think we closed somewhere around 290. On the downside, we're going to be watching this 280 level for support. We've been talking about this ad infinitum. I've been waiting for a chance to say that for a few months now. So let's take a look at a longer picture of the SPYs. Okay, and this is a longer picture, and again, 293 level should be important because it was the top here. Getting back close to that. 280 level is important because last year, a year ago, or actually over a year ago at this point, you can see the 280 level was the top here. Top here, it was the bottom here through, I believe that was July. Then it was the top here, here, and here. So again, you don't need to be a chart guru to see that that's an important level. So if we do head lower, that will be our first significant support level, I believe. And you can see, I mean, look, it's like, I mean, this is a big rally, right? This is a big rally since, what was it, Christmas Eve? So I mean, we're just due for some profit taking. I mean, markets just don't go straight up. All right, let's get into some of the sectors. Now, this is what I was talking about. The XLKs have gotten above this important 76 level, which was the top in last July and last like September and October. So we're above it. We're very overbought. So I would suspect that this rally is going to go sideways for the next few days. But anyway, let's keep an eye on the 76 level. If this thing breaks, it's going to be the first or one of the first indications that the broader markets are going to go lower. And again, when I say broader markets, I'm talking about the SPYs. These are like the sectors that make up the SPYs. Some of my clients trade these sectors individually, but this presentation, when I talk about the market, I'm talking about the SPYs. And my clients know that I don't trade these XLKs because they're just too volatile for me. But you got to watch them because it's 30% of the SPY, right? Okay, and here we have financials. And again, this is something else that, overbought. In theory, it's kind of in the same, whatever dynamic, I guess, as the tech sector. It's overbought, just got above an important level, 27 to 27.50. So now over the next few days, we need to watch and see if this level holds above, or if the XLFs hold above 27. So XLKs, 76 is a level to watch. XLFs, 27 is a level to watch. I don't know if you guys can hear that, but that's one of our guinea pigs. Yeah, guinea pigs are funny pets. I guess people that have been listening to me for a while remember Porky. He used to sit with me when I did my presentations on Sunday morning, but unfortunately, Porky is no longer with us. He's at the great guinea pig meadow in the sky. But anyway, we missed that big fat guy. So here are healthcare. You can see, I mean, where's the fake financial media talking about this? I guess they're so obsessed with that stupid Mueller report. No one's bothered to look at this, but I mean, healthcare has been in a free fall, okay? And it's extremely oversold. And the last times it was this oversold, it rallied, right, here and here. So we're due for a rebound here, which will probably give the market some stability, the broader markets. And we're at this 86.50 level. That's been important in the past. It's low here. I mean, we blew through it with the sell-off, so it's probably not as important as it used to be. But anyway, just something to watch here. XLV is very oversold at potential support. This could even be a trade here. The key is buy it when it breaks the trend. Don't try to catch the bottom. All right, so we can talk more about that in my trading ideas. Consumer discretionary. Once again, we have a similar dynamic as the XLFs and XLKs, right? We're overbought, just got above what I consider an important level, 118. So this is something else to put on your radar screen now. XLY is 118. Sorry, so what do we have now? XLK 76, XLF 27, XLY 118. If you see those three levels break, I think it's going to be the first sign that we're going to go into, not a market crash or anything like that, but a meaningful sell-off, a meaningful correction, so to speak. It's not like you got to buy guns and stock up on water and vitamins and move to Montana and join the militia. It's just normal market action, right? Markets don't just go up. So here is the industrials. These things are kind of hard to get a hold of for me in the short term, but you can see they gapped up. They've just been kind of gapping around the last month or so, and when things gap around, that could be a bearish signal. Like in the traditional technical analysis stuff, you can make the argument this is what they used to call a broadening top, which really just says things are gapping all over the place. And it tends to be bearish because when things are bullish, they just kind of trend right up, right? It's like a nice smooth uptrend as opposed to all this, as opposed to all this like jumping around in here. So something else to watch there. If we go lower, I'd be watching the 71 level. Even though we blew through it on this sell-off, that was important back here. Oh, consumer staples. Now this is at unimportant resistance level because this was the prior top, right, at 57. And this is very overbought. And you can see up there that it's overbought. So watch an eye on the XLPs. Boy, this is a nice trend here, right? Jeez. Look at that. And the thing about trends is, it's not mysterious. You just have to understand. It's like when things are in an uptrend, the forces of demand are in control. When things are in a downtrend, supply's in control. When things are trading sideways, forces are in equilibrium. It's like X's and O's on a football, diagram or whatever. All right. So anyway, so we're watching this 57 level here. So this will be pretty interesting. So, right. All right. So there we go. Now there's four of the sectors. Four of the sectors have important levels here to watch. People are telling me that they're sick of seeing this chart, but I don't care. Start your own blog and talk about it. If you don't like it, talk about something else. But what we do here is we look at important levels and trends, and this 50 level in the XLPs is one of the most clearly defined levels I've ever seen. It was pretty much the dollar, the top, all the way out 2015 was pretty much the dollar, the bottom, and 2.5 years ago in September. And then in May, I believe it was, and in December, the low trades were right around 49. So that 50 level is important to watch. And if the market gets back there again, which might or probably will one day, it's going to be important support again. All right, energy looks like we finally broke this 66.50 level. So I don't know, kind of sideways, kind of neutral. Probably going to consolidate around these levels. This is a longer term chart of the XLEs, and you can see here, again, you don't need to be a market guru to see certain levels are more important than others. Like, obviously the 78 level is important. And there's no way an academic or a random walker or a fundamental person could actually explain why this happens. How could these baskets of equities have the same valuations at such different periods in time? I mean, well, they're still trying to figure it out in academia, but us traders know it's certain levels are more important than others. And you might say, well, gee, Mark, that's fine and dandy. How does this help me? Well, you might have an energy stock that you want to sell, right? Say the market rallies and you're thinking, oh, I'm going to sell my XLEs at 80. Well, guess what? They might not get to 80. They might go like that. So that's going to cause you to adjust your tactics and your prices. So that, my friends, is why you should know where these levels are, and that is how they can help you. All right, here's materials. It was pretty much in the same position they were last week. I literally did not even rewrite this. It's the same thing I had last week. Continuing to trade sideways at this 58 level, still overbought, which tells me that we're going to either still consolidate or head a little bit lower. 58 was support back here, June through September. If we head lower, I'm going to be looking for some short-term support around 56. And again, keep this scale in mind here. This might look like a lot, but this is literally $2, 58 to 56. This is, in my opinion, a boring sector, and it's a very small part of the S&P, but we still need to look at it. And last but not least, here's utilities. And again, this is another chart or description, I guess you'd call it. I literally did not change from last week. Trading sideways, neutral, support of 57 because it was the top back here. All right, everybody. Thanks for tuning in. Again, I think this week or next week, we're going to be seeing some interesting dynamics and seeing a trend develop one way or the other. My guess it's going to be to the downside because I just think the market's due for some profit taking. But again, you can't be married to an idea. Like I can't go into work tomorrow and be like, all right, well, the market's going to go down. The market's going to go down. You got to just watch it, watch these levels, watch how it plays out. And probably the next week or two will give us some direction to where the next month or 2 or 3 is going to be. All right, everybody have a great week. Enjoy your holidays. And thanks for tuning in. And we'll talk next week. Thank you.